There's a common myth that you need a high-paying job or massive inheritance to become financially free, but did you know that according to a survey by the Bureau of Labor Statistics, nearly 8 out of 10 millionaires in the United States are self-made? It's time to shatter the belief that financial freedom is out of reach for the average person. John earns a decent salary but has a lot of expenses: student loans, rent, car payments, insurance, groceries, etc. He barely has any savings left at the end of the month, and he feels like he's living paycheck to paycheck. He wants to have more money, more freedom, more security, but he doesn't know how to get there. Well, I know he's not alone. Millions of people are in the same situation as John. They're stuck in the rat race, working hard for money, but not making money work hard for them. They're following the advice of Robert Kiyosaki's poor dad, who tells them to go to school, get a good job, and save money, rather than his rich dad, who advises on investing in assets that generate income. But what are these 4 types of assets that Robert Kiyosaki recommends you focus on if you want to become rich and free? That's what I'm gonna reveal in this video, so make sure you watch it till the end, because the last asset will change your life. I'm not kidding. This is the one thing that people haven't discovered yet, and it can help you build wealth real quick and achieve financial freedom. If you miss this, you'll be kicking yourself later. Trust me, you don't want to miss it. Opening the list is the businesses. As the renowned author and financial expert Robert Kiyosaki says, businesses can be a lucrative passive income source when established correctly. To achieve this, it's crucial to understand Robert Kiyosaki's cash flow quadrant, a diagram representing 4 types of individuals in the business world: employees, E; self-employed or small business owners, S; big business owners, B; and investors, I. Each of these categories requires different mindsets and strategies. In the employees category, individuals value job security and seek a steady paycheck with benefits, regardless of the position they hold in the company. Their core values revolve around the safety and stability that a job provides. Next, we have the self-employed or small business owners, S. These individuals often wear multiple hats and take pride in doing things themselves. They rely on their skills and expertise to make a living and maintain control over their work. However, their income is still tied to their own efforts and time investment. Moving to the right side of the quadrant, we encounter the big business owners, B. This category represents entrepreneurs who've built large-scale enterprises with 500 employees or more. What sets them apart is their ability to create systems, establish strong networks, and surround themselves with intelligent professionals to run their businesses. Unlike the self-employed, they prioritize leveraging the skills of others rather than doing everything themselves. Lastly, we have the investors, I. These individuals have mastered the art of making money work for them. They've built a portfolio of investments that generate passive income. By wisely deploying their capital, they create opportunities for their money to grow and multiply, often with the help of financial advisors and experts. Understanding the cash flow quadrant empowers you to make strategic choices about your financial path. As an aspiring entrepreneur, you have the opportunity to shift from the E or S quadrant toward the B or I quadrant. By starting your own business, you can move from being an employee or self-employed individual to becoming a business owner and investor. This shift opens up a world of possibilities, including the potential for passive income and financial freedom. Let's take an example. John, a software engineer, decides to start his own business by creating an app that helps people track their expenses and budget their money. He spends his evenings and weekends developing the app, testing it, marketing it, and getting feedback from users. He launches the app on the App Store and charges a small fee for downloading it. He also adds some features that allow users to upgrade to a premium version for a monthly subscription. John's app becomes popular, and he starts earning income from it. He hires a team of developers, designers, and marketers to help him improve the app and reach more customers. He also outsources some tasks, like customer service, accounting, and legal issues to freelancers or agencies. He creates a system that runs his business without his constant supervision or intervention. Instead of working tirelessly for a paycheck, he creates a business that generates income, even when he's not physically present. Doing this will secure his financial future and leave a legacy for future generations. While creating a thriving business is undoubtedly a valuable asset, it's essential to broaden our horizons and explore another avenue that Robert Kiyosaki believes is equally vital in securing financial freedom: real estate, which Robert Kiyosaki firmly believes holds tremendous potential as a passive income asset. According to Kiyosaki, investing in real estate offers not only a reliable source of income, but also the opportunity to cultivate wealth gradually. What sets real estate apart, in his view, is its tangible nature, a physical asset that can be seen, touched, and appreciated. Kiyosaki stresses the significance of identifying properties in high-growth areas, as they're likely to appreciate in value over time, maximizing returns on investment. Now, what if you don't have the capital to venture into real estate investment? Fear not, for Kiyosaki has an ingenious solution: OPM, or other people's money. In his own words, he encourages individuals to leverage borrowed funds to purchase rental properties. By doing so, you open the doors to an additional income stream that complements your regular 9-to-5 job. The rental income not only covers the mortgage payments and associated expenses, but also leaves a surplus in your pocket. Furthermore, real estate investments present the opportunity to lower your tax burden, effectively granting you free money that you can put to good use. Why not seize the benefits of these tax breaks while embarking on your financial journey? As you gradually amass more rental properties, you'll find yourself becoming less reliant on each subsequent paycheck. This transformative process signifies true financial freedom as your assets begin to work diligently on your behalf. As you navigate this path wisely, you'll witness the gradual emergence of multiple passive income streams, thereby creating substantial wealth that future generations can inherit. For example, John decides to invest in a rental property located in a less affluent neighborhood. Despite the area's unfavorable reputation, John recognizes the advantages of its close proximity to public transportation. This strategic location allows him to set a higher rental price, taking advantage of the convenience it offers to potential tenants. By prioritizing the property's potential for generating consistent cash flow rather than being influenced by its negative perception, he successfully generates a steady and supplemental income from his investment. He now receives $3,000 in rental income per month and must repay the bank $2,000. So he now has $1,000 left as current cash flow, which he can save for future repairs or further investments. While real estate offers the stability of tangible assets, let's now dive into another exciting asset class that has captured the attention of investors worldwide. Robert Kiyosaki continues singing its praises. Commodities are another class that Robert Kiyosaki considers valuable for investors seeking passive income. According to Kiyosaki, commodities serve as a protection against the potential devaluation of fiat currencies like the US dollar. He refers to commodities as God's money, highlighting their intrinsic value and their ability to preserve wealth over time. Commodities such as precious metals like gold and silver have been sought after for centuries. Their limited supply and enduring desirability make them a reliable store of value. Unlike paper currencies, which can be easily printed and manipulated by central banks, the value of commodities remains relatively stable. This stability is especially important in times of economic uncertainty or when traditional currencies experience inflation or loss of purchasing power. For example, let's consider the scenario of the US dollar gaining or losing value. When the dollar gains value, it means that its purchasing power increases, and you can buy more goods and services with each dollar. In such a situation, holding commodities like gold or silver can act as a hedge against inflation. The value of these commodities tends to rise as the dollar's purchasing power diminishes. This allows investors to protect their wealth and even potentially profit from the dollar's decline. Conversely, if the US dollar loses value, commodities can still prove beneficial. As the dollar weakens, the prices of goods and services tend to rise. However, commodities like gold and silver generally maintain their worth, providing a stable alternative to protect against deflationary pressures. Investors who hold a portion of their wealth in commodities can mitigate the negative effects of a weakening currency and safeguard their purchasing power. Furthermore, commodities offer diversification benefits to an investment portfolio. By allocating a portion of assets to commodities, investors reduce their reliance on traditional stocks and bonds, which are subject to market fluctuations. This diversification helps to spread risk and can enhance overall portfolio performance. However, Kiyosaki emphasizes the importance of conducting thorough research and staying informed about market trends when investing in commodities. The prices of commodities can be influenced by factors such as supply and demand dynamics, geopolitical events, and government policies. Therefore, staying updated with reliable sources of information is crucial to make informed investment decisions in the commodities market. Additionally, investors have various avenues to access commodities, including physically owning the assets, investing in exchange-traded funds, ETFs, or trading futures contracts. Now, as we enter the realm of the final asset, get ready for an asset that could change the way you think about money. This new asset class is still in its early stages, but it has the potential to unlock a world of possibilities for your wealth accumulation journey. If you're ready to explore new opportunities and untapped potential, then you need to learn more about this final asset, Bitcoin. Robert Kiyosaki has expressed his support and recommendation for Bitcoin as an asset. He believes that Bitcoin, as a decentralized digital currency, offers several advantages for investors seeking passive income and wealth preservation. Kiyosaki, while discussing the future of Bitcoin, boldly predicted that by 2025, its value would reach $500,000. And he also foresees an increase in the prices of precious metals, with gold climbing to $5,000 and silver soaring to $500. Kiyosaki sees Bitcoin as a form of people's money that provides individuals with an alternative to government-controlled fiat currencies. He has expressed concerns about the risks of inflation and potential devaluation of fiat currencies due to government policies and excessive money printing. According to Kiyosaki, Bitcoin provides an alternative form of money that's not controlled or manipulated by governments or central banks. One of the key features of Bitcoin that Kiyosaki finds appealing is its limited supply. Bitcoin has a maximum supply of 21 million coins, and this scarcity is designed to protect its value over time. Kiyosaki believes that the finite supply of Bitcoin combined with increasing demand can potentially lead to price appreciation and wealth accumulation for early adopters. Additionally, Kiyosaki sees Bitcoin as a means of preserving purchasing power. He argues that the decentralized nature of Bitcoin and its resistance to censorship make it a viable option for individuals looking to protect their wealth from government interference and control. However, it's important to note that Bitcoin is a highly volatile asset, and its price can experience significant fluctuations. Kiyosaki himself acknowledges the risks associated with Bitcoin and advises investors to educate themselves and exercise caution before investing in cryptocurrencies. Again, while Robert Kiyosaki sees potential in Bitcoin as an asset class, he also emphasizes the importance of conducting thorough research, understanding the risks involved, and making informed investment decisions based on individual circumstances and risk tolerance. And as we come to the end of today's video, did you know that you can own a home even if you don't have a penny saved? Impossible, right? Not so, says Robert Kiyosaki. Eager to know how? Well, make sure to watch our upcoming video.